Okay, so the gross profit margin equals gross profit divided by sales. And what is the gross profit? Gross profit equals sales minus cost of goods sold. So you go to a restaurant, you pay $80. That is your sales. And if that meals you ate cost the restaurant $20 in the cost, so the gross profit would be 80 minus 20 equals 60. So your gross profit is 60 divided by sales 80. That's 75%. Pretty high. The higher, the better. That's the gross profit. And then what is the profit margin, right? So profit margin is net income divided by sales. And gross profit margin is gross profit divided by sales. So these are the two margins. The denominators are both sales. The difference is on the numerator. Gross profit margin is the gross profit divided by sales. And the profit margin is the net income divided by sales. So what's the difference? So let's continue the story, okay? So you eat at a restaurant, you pay $80, and the cost of the meals is $20. So the gross profit is 60. But don't forget, that's not all the money the owner is making. The owner has to pay the rent. The owner has to hire waitresses to serve customers. The owner has to make an advertisement to attract people to come, right? So those expenses are necessary for the operation. So you use gross profit minus expenses. That is your net income, okay? So gross profit is always higher than net income. The difference is the expenses. And of course, the higher profit margin is better, right? You want more income, right? So does this make sense? Does anyone understand gross profit margin versus profit margin? Did I explain the two concepts clear? Any question? Okay, no question. We'll move on. We move to the asset turnover. Okay, so what is the asset turnover? Is the sales divided by the average total asset. So remember, you have the statement of financial position. You have assets, liability, and shareholders' equity. So the total assets, average of total assets. So how do you do the average? So you use the beginning total asset plus ending total asset divided by 2. So that's how to calculate the average. So sales information will be coming from the statement of income. And then you go to that statement of financial position. You'll be able to see the beginning total asset balance and the ending total asset balance. And then you take the average of the two. That is your average total assets. Return on assets. Okay, what is the return on assets? So you use your net income divided by average total assets. Okay, use net income divided by average total assets. Return on common shareholders' equity. This one, we talked a little bit about this. So basically, you use net income. And remember, not 100% of net income is available to the common shareholders. It first has to go to the preferred shareholders before the common shareholders. So I use net income minus the preferred dividend they declared. So that difference are the income available to the common shareholders, right? Because income is available to preferred shareholders and also common shareholders. Preferred shareholders get the first. So you use your income minus the dividend goes to the preferred shareholders. So whatever left is the income available for the common shareholders. And then you divide the average common shareholders' equity. So how do you calculate average common shareholders' equity? You use the total shareholders' equity minus the preferred shares. So the higher is better. The higher is better. Basic earnings per share. Okay, so earnings per share. So again, you use your net income minus the portion goes to the preferred shareholders. That is the preferred dividend declared, divided by the weighted average number of common shares. And how to do the denominator? We have gone through one example to figure out how to calculate the weighted average number of common shares. Okay. Price earnings ratio, we also call this PE ratio. PE ratio is the price, which is the market price. Earnings is the basic earnings per share. So I use market price per share divided by basic earnings per share. So for example, if the share is traded at $10, so my market price per share will be $10. If I calculate basic earnings per share is $1, so $10 divided by $1, that ratio is 10. So price earnings ratio would be 10, right? So the market price can be found on the stock market. The basic earnings per share can be just calculated like this, right? Like this one. Payout ratio, that's the dividend, cash dividends declared divided by net income. We talked about this at the very beginning of the lecture. And dividend yield, that's the dividends declared per share divided by market price per share. We also talked about this in the beginning. So for each share of dividend, how much each dividend declared divided by the market price per share. Okay, so you can see we have quite a bit of formulas for this section. And by doing a little bit more practice, you will know all these formulas fairly well. Okay, just have to practice a little bit, doing some questions to practice. Yeah. Okay, so does anyone have any questions about these ratios? And remember, these ratios are used to analyze profitability. So quite a long list here, right? Quite a long list. Does anyone have any question? Okay, I'm going to stop recording.